Hello everyone and welcome to the live trader talk, the fifth one that I'm doing. So today we're going to be looking at some cool trade ideas and then also most importantly going over the updates for the last week or two. So just to introduce myself to you, my name is Morgan. I'm the head of trading at MSC Academy and I've been trading for over a decade now. I've also been teaching students around the world how to trade in the financial markets for the better half of a decade as well. So for today's video, I'm going to start off by doing a recap on some of the previous trade ideas and then do a small recap on the previous video that I uploaded talking about the market swings that were caused from around about the 10th of October till now. So I've actually taken about a week or so off from making videos because the markets were quite volatile, but I see that now we're back to the previous highs. There's been quite a good market recovery. I feel like that volatility is going to die down quite considerably. So just to start off with, as we can see on the charts here, this is the VIX volatility index, which I always like to start out with. So you can see that the VIX had been trading around below this 20 level for a considerable period of time. There was not much volatility to speak of right up until the point that you can see there was a buildup of volatility right to this point, and then all of a sudden we had a massive spike to the upside. So volatility spiked considerably higher, and you can see that once that volatility hit its peak, there was quite a big spike on the week of the 17th, and then volatility started to peel back down to the downside. So it's safe to say that volatility has subsided considerably, and that has helped because the market has been very volatile, and volatility is good, but there are also times where it can be difficult to manage the volatility when you're trading certain strategies that are not necessarily focused on capitalizing on high volatility markets. So just to start off with, one of the big trades that I discussed in I think it was Trader Talk number 3, I had spoken of a trade idea on oil. And interestingly, I left these boxes up that I put on during that talk. So if you want to go take a look at that talk, you'll see, I think it was live Trader Talk number 3. I talked about the next big trade idea for US oil. And it literally played out quite exactly like I had predicted. And it was a great trade opportunity that I took. So I initially took oil on a buy from $60. And one of my major concerns with it was that this position, when we went long at $60, I didn't like the trajectory of this position, the way it was moving. I felt like there should have been a lot more movement. So we spiked up round about to that $62.50 level, give or take, around about up here. And then the market sold down all the way to the downside. Now, because of the low trajectory of this trade, when we closed on a bearish candle, this was back on the 8th of the 10th, I already knew that this was not good for this trade opportunity. So I decided to cut that position, and this market sold off all the way down to around about $56.14, give or take. So we were testing that $56 level. Historically, we had back in April and was it April and yeah, beginning and middle of April, we had the market testing that $56 level before. And as you can see, there was a very strong recovery from that level before, and the exact same thing happened. So I had inserted these boxes to show exactly where I wanted to get in on this position if it broke below the $60 level. It broke that $60 level, as you can see. Let me just go down into the smaller time frame. You can see it broke that level with a bearish engulfing candle, retested that support as a new resistance, and then continued to sell off to the downside. So once it hit that $56 level, I noticed on, I think it was a 30-minute time frame, you could see a bit of a bearish head and shoulders. So you could see that the market spiked down and retested this level 3 times. So it was more of a support test than a head and shoulders. And I knew that this was probably going to be the bottom of the market. So I got in on my position here at about 56.50, and I held that position all the way to the upside. I held target 1 to $60 and then waited for the market to move higher. But you can see that one of my big concerns was is that this market was doing a double support test and then moving lower. So as you can see here, the market was basically taking these steps, moving lower and lower. But the reason why I knew that the $56 level was probably going to be the level that it stopped at was because of the historic support level that was formed back in April. So I waited for that market to move all the way down to the bottom there. And the market popped perfectly. So I'm not sure if there is an issue. I'm getting an error here. Give me a moment. Just want to double check that this is working. Seems like it's working fine. Okay, I'm just going to continue moving, and if something's wrong, just put a comment down, and then at least I know that something might be wrong. So once I saw that $56 level getting tested, it made perfect sense, and you could see that the market was basically just creating more breakouts as it moved further up. So you can see that this level, it was basically creating steps back out of it. And now you can see that this level has been tested. So target 1 was $60. I already got to target 1. Now target 2 I've left open. And what I'm really watching is if this level gets broken. So I saw this market, I thought that we were going to continue moving higher. But as you can see, this trend was broken. So I've also been watching carefully if this market begins to break this horizontal support level, then I'm going to want to get out of the position, because then it's definitely a sign that this market could start retracing and moving against me. So I'm just waiting to see what happens, but hopefully we see the market continue moving higher. But the thing is, sitting at 60, give or take 62.20 at its peak, I mean, to move from 56, around about $56 to $62, I mean, that's a $6 move. That is a huge amount. That's over 10% that the market has moved just in the last week. So 10% move up on oil is massive. Going into the next trade that I wanted to talk about, I had spoken about the sell-off in Trader Talk 4 about the market having sold off to these lows. Now, it was interesting to see this setup because there was definitely a lot of structure that was formed, but at the same time, there was a lot of volatility. So you can see how the market, once it sold off to this low here, the market gapped open, moved up, which was it was a very confident sign. And then you could see how this market continued to try and move higher, and short sellers were stepping in and basically breaking this market back down. So this was, for me, an important thing to watch throughout the week, and this is really where most of my time was spent. But you can see that the market was trying to push to these higher levels, and the breakdowns were considerably volatile. There was quite strong moves to the downside, and you can see over here how this market very, very carefully uh, built all the way back up to create a high on the week. So you could see that this market broke all the way back down, retested, basically recovered straight back to the previous highs. I didn't necessarily expect this, but throughout all of this, I was trading in and out of intraday scalps. And I'm going to show some examples of the intraday scalp setup that I was seeing. So the market recovered back to this point, moved higher, sold off all the way to the downside, once again recovered back and didn't quite reach this previous resistance level, and the market sold off again, and there was a huge sell-off to this market. And then, as you can see, the market recovered, had quite a good strong push, broke these previous highs quite perfectly, and then you can see over here the market once again basically traded out all of its energy on this level and then moved lower again over here. So once this market moved lower, there was not much, the market was going to continue moving down, and then you can see how the market went all the way back up to this point. Now, an interesting part to see, however, is so this area, I'm just going to insert a object. So this area here was the previous resistance, and you can see that the market was not necessarily wanting to move below this support level, and you can see that the market was basically building itself back up. So the market was definitely going to recover, and this was where being long in this market would have made sense. However, the volatility to the downside was so steep that I wasn't willing to hold a position open, because initially I tried holding a position open on this double support test, and I got stopped out in that position. So as much as it, looking back, can make a lot of sense that you should have gone long in the position, if you're going to get stopped out in that market, then you have to be a lot more careful about it, because I didn't take a look at being long at the bottom here. I looked at being long at this level, and you can see that the market continued to break down below that. So when the market recovered back to this level, I went long, and I was able to hold that position to the upside. So I was at least able to wait till after the market recovered from this low and continued moving higher. One thing I did see, however, which I'm going to break it down in the 5-minute time frame, is the market was having a very strong consolidation period throughout the day, and often breaking out into the late evening sessions. So say, for example, we had this incredible push up here. So we had the market trading all the way up over here, and then you can see pre-market, this was around about, I would say, 4 or 5 o'clock US time in the morning. You can see that there was a huge push to the upside. So this was pre-market. This was midday in the European markets. And then you can see how there was a consolidation back to the downside. And then right into the late evening, you could see that this market broke down again. So a lot of these market pushes were either happening pre-US market or post-US market. Now, interestingly enough as well, you can see that the market was building up over here as well. So there was a beautiful setup over here where you can see the market's trading up to resistance. It's not quite breaking that resistance, and then you get volatility that pushes above previous market structure, and you've just got this beautiful run up. Now, a lot of these run-ups did get broken down, which is why you'd be more in a position to scalp than intraday trade. And that's why I was saying, as much as you can look at the structure of the market and say, oh, it would make sense to be long in this market. Well, a lot of people did that with Bitcoin, and that didn't work out for them because Bitcoin had a massive spike to the downside. So as much as you can keep your stops in play, uh, you're going to be putting your stop much further beyond where you believe the market could be going to. And that is a huge issue because then there's no thought process to the structure of your stop loss. You can't just put your stop loss in a position where it's like, I'm willing to lose that much. Okay, fair. But it's better to put your stop loss in a place that it's below the market structure. But now, if this market structure is being broken, as we can see over here, is the price broke above this structure beautifully. So there was this great consolidation over here, and then you can see how the market broke above, went to these highs over here, and then broke back below that structure. So even if you were to put your stop loss below this breakout zone, you would have been stopped out if you held that trade, which is why a lot of the volatility in this market is volatility that you would have wanted to trade scalping and not long-term trading. Now, for myself, I'm predominantly a long-term trader. I started out scalping, but I moved to long-term trading just to be more effective with my time. Because when you're scalping, you have to be there. And that was just too much of a time commitment for me. But as you can see over here, there were times where the structure was broken, and let me just show you here, for example. This structure would have been a great opportunity to buy and go long. But again, you're pushing it real close to your stop loss area. So you had this consolidation over here. You could see that there was a lot of bullish movement. These very long tail wicks were showing that price was pushing lower and rejecting those price levels continuously. Then you had the breaker market structure push to the upside. But the problem is, if you miss this candle, which is a 5-minute candle, meaning you could have very easily missed it if you weren't watching the charts, then you would have gotten in this trade somewhere over here, and you wouldn't have gotten much profit for it, and the market would have broken all the way back down to that level. A lot of people also say you enter on the retest of the structure breakout. So let's say, for example, you entered on this level here, you would have had really good push to the next resistance of market structure. So this would have been a huge profit opportunity. But again, as much as it looks like a really great trade to hold on to, you're really going to be wanting to focus more on scalping. But as you can see over here again, market structure broke. And as you can see, if I show, so this we're around midnight. So this is around midnight my time, which is just at the end of the market session for the US. So the market session in the US ends around about give or take 10:30 my time, 11 o'clock my time. This is really right at the end of the market session. So as much as there is a sign for the market breaking beyond that structure late session, I definitely noticed that early session, as you can see over here, this is around 8-9 o'clock, which is just towards the end of the session. So you have this huge run up, this huge push, and then very late session you have the structure breaking. So that was definitely something I was watching very carefully. So late into the evening, so late US session, I was seeing that there was a lot of breakouts occurring. Now, this is pretty much back to its previous highs. So as much as I'd be able to write home about it and say that it would be a new bull market or a recovered sell-off, this was definitely a lot smaller and a lot shorter lived than I expected it to be. in terms of this setup here, now that we've broken above previous market structure, for me personally, I'm waiting for this level to be retested before I get back in on a trade on the US markets. It does make sense to be long the US markets if there is an opportunity to get in above past resistance. However, with the heightened level of volatility that we could continue to see in the US markets, you have to be very careful where you're putting your position in. It could be a play where you're trading with a trailing stop, but even with a trailing stop, you could get stopped out on your orders quite quickly. So I'd say trade on the breakouts, use tight stop losses, try to get your stop loss to the entry point so that at least you're not losing money, and try to wait for the breakout. Don't buy into the position before the breakout, because as much as some market structure looks like it's bullish, there is also market structure that turns out bearish at the end of the day. So going into the next trade I wanted to take a look at is the EURCHF. So that's the Euro Swiss franc. Now, I'm a bit 50-50 on this trade, but I felt like it would be good to share the trade with you so that you can also see my thought process. Excuse me. You can see the thought process and also where I feel like there could be limitations to this trade idea. Once again, the EURCHF is a great trade opportunity if you're going long, because you've got a positive interest rate differential. I believe the interest rate differential is 2.5% right now. The euro is sitting at about 2.5% interest, and the Swiss franc sitting at 0%. So if you are buying on this trade on EURCHF, you are earning a positive swap rate, which is great considering that swaps can literally kill you when you long-term swing trading, because as much as you might be making profit on a trade with a negative swap, you're now paying the negative swap rate out as well, which can severely eat into your profits. So for me personally, when I'm trading FX, I try to trade on a positive swap rate. So meaning if I'm buying, I will focus on a certain batch of FX pairs that I know all of them have a positive swap rate on a buy. And then I go to a different profile where all of those FX pairs have a positive swap rate if I'm selling. Now, one of the issues, however, is on EURCHF, if there's a positive swap rate on the buy, the market is often falling. So as much as it might be a good opportunity to get in on this trade, there might not be a lot of buy opportunities. However, on certain markets, the Swiss franc, for example, has a 0% interest rate. The Japanese yen has a 0% interest rate. There are currency pairs where you're going to succeed with finding trade opportunities that are positive to the swap. So for the EURCHF, what I've been watching is the market has moved down to this historic low. Now, this historic low is currently sitting at I actually didn't write the current price down. The current price is sitting at 0.92515, give or take. Let me just move this level here. I actually can't see it. Yeah, give or take 0.92515. So you can see that the market had tested this level multiple times prior. So this market since, give or take, let's see here, 2023, December 2023, tested this low level. Then that market spiked all the way back up, and then came back to retest this level again. This market has done it multiple times, and now you can see that the market once again has tested this historic low level. What's important to see about this, however, and this is where I'm cautious on this trade opportunity, is that the market is tightening. So price is tightening. We're seeing the same support level getting tested while lower highs being applied. Now, what my trade idea is to trade within these levels. However, it might be an opportunity to watch the market break beyond these levels. I just don't know if it's going to happen quite yet. So in terms of this trade idea, it is a pivot point swing strategy. So I'm looking to get the market to pivot. Some people call it a dead cat bounce. Now, a dead cat bounce is basically where the market will bounce from a support level, but will not return back to its previous high. Now, when these markets don't return back to this previous high, that's normally called a dead cat bounce, where you can see the market basically bounce off a support level and then continue moving lower. Hey, come in your bed. Sorry, my dog has been very talkative. So if we see this market breaking beyond this trend line, I believe it could take a lot longer than we anticipate. So the current levels that I'm looking at is as a possible retracement zone, we could see the market moving to 0.92978. So 0.92978, you can see, I'm just quickly going to put down, there we go, give or take. So the market has broken below where fair value price is. So fair value price being where most of the trading is taking place. Now, if I just put a horizontal line here, you can see that price is sitting within this zone. Hey, stop it, in your bed. Price has been sitting within this zone here and has not moved beyond it. However, you can see that when prices move beyond this level, it's almost immediately retraced. And that's what I'm hoping is going to happen here. So now that there is an opportunity for a retracement, my target one is basically sitting below this entry level. So below this range where most of the price is sitting, that is the quick profit. That's where I want to take my quick profit on this trade and get out knowing that I've at least locked in some profit. So on this trade, I've taken 4 positions. I've taken it basically at the test of this low. You can see over here, there was a market moving to the low here. And what happened was when there was this big bullish engulfing candle, I was a bit early to the trade. I thought I was late. So I took 2 positions around about over here. And then sadly, the market sold off, so I could have had a better execution. And then I took an additional 2 positions over here. And then I got a little bit nervous, I'm not going to lie. The markets continued to sell off, but we saw that recovery back to the upside. So we have been forming a very slight uptrend over here that you can see. And that for me has been something that I'm watching very carefully to see if the market is going to continue moving higher. Now, you can see here that in order to get back to those previous resistance or the previous support level, the 929 level, we're going to have to wait quite a bit of time. But once again, this is a swing trade, so you have to be a little bit more patient with this trade playing out. Now, on Friday, the market did sell off a bit, so that's also something that I'm watching. But something that I watched carefully, which has stood out to me on this trade idea, is the stochastic oscillator on the monthly, weekly, and daily are all oversold. So it's showing that the market is oversold considerably. Now, you can see that the market has moved beyond its oversold region on the daily, but still on the weekly and the monthly, it is oversold. Another one, however, is that you can see the MACD is losing momentum. Now, of course, it would be losing momentum because you're having lower highs and the same lows, but you can see on the weekly as well, every time the market has tested this level, you can see less and less momentum in the market, which means volume is collapsing in. Therefore meaning there are less sellers stepping in on this market because it's at this historic support level. So personally, my mindset on this trade is that I need to wait for the buyers to step in, that once enough buyers step in, we're going to see this market spike back to the upside. Now, in terms of the market structure, you can see that this market has been selling off, making higher lows every single time. So I basically placed two trend lines here, one focusing on following the very strong spikes, and the second one focusing on the lower spikes of price. That has given me a zone. So if I were to go back down to the 4-hourly, that at least gives me a zone here where I know the intersection of these levels. Let me just go to the daily. I think that's going to be easier. So the intersection of these levels over here are really where I'm focusing on setting my take profits. So like I mentioned to you, this 929 level is target 1, and then target 2 is going to be at these levels higher up. So I personally think we are going to see a push to the higher levels, because as we've seen after times where the market has tested these levels, we've had a really strong push. Now, here's the great thing about this trade. Because there's a positive swap interest rate, even if I were to hold this position for months on end, I'm earning a positive swap. So I'm earning money every single day I hold this trade idea, which means it's a great trade idea to hold on to. This is not a trade that you have to get off your portfolio. As long as you're in profit, which given the execution on the level that I bought in at, I'm probably going to be in profit for a considerable period of time. And I'm able to, once I hit target 1, close off the first 2 positions. Then with target 2, it is very far away from where price currently is, which means it's a huge swing for the fence. Could be a great profit, but the idea being that even if the market moves to one of these levels up close to this and breaks all the way back down, I can move my stop losses up to the 929 level, sit them in profit. It's not going to be as much profit as as target 2, but at least means that all of the swaps that I'm earning, the positive interest rate differential means that I'm earning a great swap on this trade, and I'd be able to, even if the market falls back to target 1, have quite a bit more of profit coming just from the swaps than anything else. So it's a great trade to hold long term, and this is definitely going to be a trade that I'm going to keep updating everyone on, just to see what might land up happening going forward in the future. Because personally, I think as a long-term trade idea, it could be a great part on my portfolio. I'm currently not short the Swiss franc. I've done a lot of work shorting the Swiss franc, and for the next trade idea, I'm taking a look at the Japanese yen. So I'm also considering shorting the Japanese yen. Let me just quickly. So I wasn't going to share this trade idea with you just yet. But you can see over here, the Japanese yen is moving to a historic resistance level. And same here, if you are long USD JPY. The interest rate differential on this trade, I believe, is 4%. So you're earning great swap rates if you're long. You're earning even more than you would on the Euro JPY, Euro CHF. But basically what I'm looking at here is, given that this market has historic highs, what I feel like is going to happen, now I'm not using past performance as future, as predicting future movement, but as you can see, what happened with this market beforehand is market came to this level, broke above it, broke back down, and then continued moving higher to retest that level. Now, what I believe is happening currently is we're seeing that market retest this low level over here. So it's a lower resistance level, but I believe that there's a chance the market is moving to test that point. So you can see here on this point on the 4-hourly chart, the market has had these beautiful breakouts. Let me just go down to the 30-minute. So it was similar to watching what had happened with the US 500 that I just showed you just now. Take a look how these beautiful steps are forming up over here. So you can see the market almost breaking down and then building back up, which has been great because this market structure is helpful, because if you're looking at a breakout trade, at a trend continuation trade, you want to see the market build into some type of a market structure like this. You know, it's not normal to see the market just break above a resistance level or a historic support level. So with this, it's great because you basically wait for the breakout, get in post-breakout, or when the market retests that level. It won't always retest that level, and hold this trade to the upside. So as you see previously, what I'm looking for going forward in the USD JPY is, if we can see the market building up some type of structure like that, you can already see a triangular breakout formation forming on this trade. So basically what I'm looking at is, given that this is the historic previous resistance level, let me just move it higher, a little bit higher over here. What I'm basically looking at is, if we get breakout of market structure over here, I want to be long on this trade with a very tight stop loss, holding this lower resistance level as my stop zone, and seeing if we break the market structure over here, then what I want to be able to do is hold that trade to the upside and see if we can move the market, if we can get a profit moving all the way to the upside over here. So once again, great swing trade opportunity. Great swing trade opportunity, and most importantly, positive swap interest rate. If we see market structure break this level, then market could continue moving higher, and Bob's your uncle. You're going to land up having a great profit opportunity. But once again, you have to be setting very tight stop losses on this, because the JPY can be quite a bit of a whipsaw. You can see here the volatility day to day is quite high, and that's definitely something that you have to be careful with. So I'm going to wrap up this trader talk. I wasn't actually going to share this USD JPY trade. There is a lot more information to this trade that I want to focus on and get into. So I'm going to make sure I do a video on that as well. But make sure to share your comments, share any inputs or ideas that you have, and I'll make sure to get back to you on them in the next Trader Talk video. But once again, thanks for tuning into the Trader Talk, and I'll make sure to